You may recall that when Bitcoin broke down below this key 200 MA level, a lot of people said that the fate of this bull market would depend on how quickly we reclaimed this level. That's what people said. Now, when you look at the charts, so I'm going to go over to the live charts. And what you can see when you look at the live charts is that we have just reclaimed that level. And that level is now starting to act as support, as resistance instead of support. Now, the big question is, can Bitcoin actually hold over that level? And is there a catalyst that can actually move Bitcoin back into that range so that we can proceed or we can continue with this bull market? That is the big question that I'm going to cover today. I'm going to show you one or two catalysts that may be able to do that. Then I'm going to show you why this may actually be a trap. That's what I'm going to talk to you about. Then what I promised you guys is that you need to watch this show quite quickly, because I'm going to show you some tokens that are going to perform exactly the same as Celestia performed yesterday. If for those of you who are in our front runners group, you know about Celestia. Celestia went from $4.30 all the way down, all the way up. It went up 78% in the last 2 days. And I think that there are a subset of tokens that may do exactly the same. But the thing with those tokens is you got to get in and you got to get out really quickly. So we've got a lot to talk about today. It seems to the naked eye that there's not much happening on the market, but if you know where to look, boy, oh boy, oh boy, you could get yourself an 80% return. Let's get going, guys. It was so hot in here. I had to get my sweater off. I had to get my sweater off. Anyway, we are back. We're bringing you crypto love and crypto wisdom. I did notice earlier on that there are now 950,000 members in the Banter fam. Believe it or not, 950,000 members. I'm so proud. I can't actually tell you. We're so close to that million mark, and I just never in my wildest dreams did I think that before the peak of this bull market we'd get to a million subscribers. But here we are. So listen, if you're not already subscribed, you know what to do. Subscribe, smash the subscribe button. If you are a subscriber and you appreciate us working every single day, consistently bringing you that crypto love and that crypto wisdom every single day, even on dry days, we are here. We're bringing you the crypto love and the crypto wisdom. Smash the like button. Let people know that we are. Let people know that we are changing lives. I saw that over 300 of you actually took a challenge yesterday in the Bitfunded trading platform. Let me know how that went. Let me know how many of you have got to the second round or the third round. We'll talk about Bitfunded later today as well. I do want to talk about altcoins that could repeat Celestia's move. And for those of you who are in our Discord group, you know about these coins, Layer Zero, a whole lot of other coins that we made, a whole lot of other calls that we actually made in our Discord group. We'll talk about those and why they are moving up and what the next Celestia is, what the next coin that could actually do 78% is. So without further ado, let's get into the alpha of today. And it's going to be a high alpha show. At the beginning of the week, I don't know if you guys remember, but I said this week, I think shorts are going to get smoked. And here we are just a few days later. And what you can see is that the market staged an epic recovery. We went from lows of 53,531. We touched that 60,000 level. Now we are, I guess we're about 10% up from the lows. More importantly, as I said to you before, a lot of market commentators that we follow and respect said that the speed or the fate of this bull market depends on how quickly Bitcoin can break above the 200 simple and exponential moving average. Now, the two levels to look for there are 58,158 on the daily close, which means that we are very close to that, and that would give us the exponential, and the simple, the SMA. We're talking about 58,820. So I think just to be safe, what we're looking for is we are looking for a close above this 58,800 level today when Bitcoin closes. And if we can do that, then we have turned on the bears. We have basically proven the bears wrong, and we have proven that this has been a very short correction, a 1, 2, 3, 4, 5, 5.5, maybe 6 day correction. And then we can get back into the range. But for now, what we're seeing is that Bitcoin is fighting this range. It's in a battle. The bulls and the bears are fighting. And the fight is about the 58,000 to 59,000 range. We want to today or tomorrow cross over the 58,000 to the 59,000 range, and we want to prove those shorts wrong, and we want to prove people like 𝗙𝗥𝗢𝗡𝗧, who said that the fate of the bull market depends on what happens on this 200 SMA or the 200 EMA. We want to prove to them that Bitcoin can actually go above that. It wasn't only him. There was many people that kept saying we need to reclaim that range. We need to reclaim the 200 EMA and the 200 SMA, exponential moving average and simple moving average. We need to do it. But as 𝗙𝗥𝗢𝗡 says, right now, that is very much a resistance. It used to be the old support. It now became the resistance. If we do get through it, and I'm saying it's a big if, but if we do get through it and we get some momentum, and I'll show you some things that could be the momentum. If we do get through it, there is a chance that we follow this Wyckoff reaccumulation schematic, or this Wyckoff reaccumulation. And in a Wyckoff accumulation, this is quite a typical pattern, and we could actually break through all-time highs if we can do it. Now, again, I'm counting the chickens before the eggs even hatch. We want to make sure that we can actually break it, but I need to show you what's on the what is on the horizon. Now, the reason why I tweeted, or I was so confident to say that shorts are going to get smoked this week, is because I felt that in the market we got to a point where there was real fear. And I said to you before, I believed that we had not seen real fear in this market. In fact, if I look at the fear and greed index, we're back at 28 now. Look, 28 is not extreme fear, but if you look at this cycle, since the beginning of the cycle, I'll take you, let's just go to the 1 year just to give us a better view. In the last year, we haven't had fear and greed under 41 in the last 12 months, believe it or not. That's crazy, but that's pretty much where it is. And now we are on 27 and 28. So we are in peak fear. And that's why I was so comfortable to say that I think we've seen the bottom. And what I'm seeing now is I'm seeing people actually fearful for the first time in this cycle. And more than fearful, I've seen that not only are people scared, but I see that people have actually capitulated and have lost hope of any kind of crypto move specifically in the summer. Some people have completely tapped out. And those that remain, every single person that I've spoken to that remain, you ask people, Josh, is there going to be a move between now and the summer? He says no. 𝗪𝗙𝗪𝗢𝗧, what do you say? Is there going to be a move between now and the summer? Around September. You see, everybody's written off the summer. You see how everybody's just said, everybody's written off the summer, and they're saying, because you know, 𝗪𝗪𝗪, in the US, in the September is actually the beginning of what they call fall, which is actually autumn. So it's the fall. They call it the fall. That's autumn, right? For all the other English-speaking people, it's autumn. So in the States, it's the fall. So everyone's written off summer. No matter where you look on Twitter, they've written off summer. Someone says, it's a classic, boring summer, brother. A little more patience, don't quit. Bitcoin, absolutely awful close. We are in for a boring, long, and choppy summer. You see, everybody's written off summer. Summer's gone. Someone tweeted, he said, will we have a boring crypto summer? 67% of people said that we're going to have a boring crypto summer, but a very small sample size, only 166 views. But I guess the sentiment is right. Minor capitulation still going on. Expect crypto markets to be boring for the next 2 to 3 months. Stay long-term bullish and avoid excessive risk. That's coming from 𝗙𝗥𝗢𝗡, who's a big market commentator, and also the owner of Cryptomanran. Now, let me tell you one thing that I do know. Every single time that since I got into the crypto market, that the whole market has been expecting something, they have got a surprise. I remember when we were all expecting Bitcoin to get to 100K, it got to 69,000, and we dropped straight back down. The whole crypto market was expecting a much longer cycle. The whole crypto market was expecting Bitcoin at 100K. What did we get? We got a surprise. I think the same thing's going to happen. I think the same thing's going to happen here. I think everybody has written off the summer. Everyone's kind of said, look, nothing's going to happen until summer, maybe elections. I think what you've got to do is you've got to stay alert. You got to be very, 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 very alert right now, because something can happen. Something can happen. And if it does, it will catch most market participants by surprise. And that's the move that I'm looking for. I'm looking for the move that takes all the market participants and says, here's the surprise. Because it happens every single time. When people give up hope, when people decide or realize that the move that they're all waiting for a move at a certain point in time. The market will always shock them. I also want to remind you that when we talk about people, we're talking about this echo chamber, which is called Twitter. And as Hasib says, it says, interesting, sentiment has created way lower than market cap has. Sentiment is down to July 2023 levels, while market cap has only fallen to February 24 levels. In other words, crypto Twitter is too bearish right now and caught right in the bearishness loop. Financial nihilism has caught up to us. Now, I want to talk about this for a sec because for many people here, crypto has been the gauge of sentiment of crypto for a long time. And for many people here, we have managed to understand where the markets are moving because we have been very, very, very plugged into this subset called crypto Twitter, right? We get all our alpha from crypto Twitter. Even when we show you a whole lot of stuff here, we get tweets, right? And up until now, it has been a very reliable gauge of a crypto sentiment. Like you go and you gauge crypto sentiment, you go and you gauge crypto Twitter, and that would give you a sentiment where we are in the market. But I think that getting stuck in the echo chamber that is Twitter is a bit of a mistake, and especially now. And the reason why I say that it's a mistake, especially now, is because this market is no longer reliant or driven by retail. In the last couple of cycles, the market was very much driven by the retail consumer. So the best place that you could find where the retail consumer or the retail investor was actually, and what they were thinking, the only place that you could get a real gauge in that was actually on Twitter. The thing is that now the market has changed. And I don't think that many people have appreciated the magnitude of the change of the market. In the previous market, retail drove the market. The retail sentiment drove the market. When retail was bullish, the market was bullish. When crypto Twitter was bearish, the market was bearish. But now we are in a new cycle. We're in a new cycle. And in this cycle, who's driving the market is not the retail investor. In fact, the retail investor hasn't even arrived at the party. We showed you all the stats around retail investor participation. They haven't even arrived yet. They're not even here. They're not even members we don't even care about them in this market because now this market is driven by the institutions. And the institutions have actually sent us a very strong message. They're saying, look, we don't really care about what's happening in your echo chamber, which is crypto Twitter, specifically around Bitcoin, obviously. Okay. And they've proven it to us by saying, I don't really care. They don't really care about how scared crypto Twitter is or what crypto Twitter think. When the German government is selling their coins, and by the way, the German government has sold so many coins, they don't even have $1 billion worth of Bitcoin left. They actually went under $1 billion. I saw that over here. I'll show you. Arkham. Let's see. Arkham. Let's see if I can find it for you guys. So if you look at Arkham Intel, they published something a few minutes ago which said Germany is not even a billionaire. The German government lost its billionaire Bitcoin status today. Why? Because the ETFs have bought it. They don't care about your sentiment on Twitter. They're like, look, we are institutional investors. We are buying this asset for a long period of time. Quite honestly, we couldn't care about what you guys are saying about your altcoins. We couldn't care about anything like that. We only care about what we are doing at the moment. We are the ones driving the market. And it's not only them. Traditionally, this market has been driven by whales. Now it is driven by whales and ETF buyers, which are becoming whales. And what you can see is that there's been massive buying volume from these whales. You can see it here. Permanent holders, mostly custodial wallets with no outflows, have accumulated 85,000 Bitcoin in the last 30 days. So these funds are buying. These wallets are neither ETFs, exchanges, nor miners. During the same period, accumulated 16,000 Bitcoin out of ETF holdings. While some panic sell, others are buying. So you can kind of see a split. You got the Twitter sphere, which are selling, and then you've got the more serious buyers, which are actually the ones in control and driving the market, and they buying. They don't give a shit. Between July 5 and July 7, they purchased $438 million of Bitcoin, which is coincidentally more or less how much the German government sold. So one party selling, one party buying, coins moving from bad hands into good hands. You can see it. The Bitfinex whales also continue to accumulate. This is quite interesting. BitMEX. Now, BitMEX is not really one of the biggest exchanges anymore, but it used to be one of the biggest exchanges. And a lot of really serious degen traders are trading on BitMEX. The recent outflow of 35,486 Bitcoin from BitMEX should not be ignored. Historically, such events on BitMEX are predictable signs that precede Bitcoin price increases. Now, what that's saying is that there's a subset of people trading on a BitMEX exchange, And when they are moving Bitcoin around like this, it usually has been an undersign or a preemptor to, an undersign is not a word actually. It's a word that I just made up. But it's a preemptor. Preemptor is a word. Preemptor. To a move, to a market move. So I agree with what 𝗙𝗥𝗢𝗡𝗧 says. He says Bitcoin had a 20% drawdown in a monthly flat. Pretty nasty. I would have been impressed if 90% of the assets under management for the ETFs hung in there, but it was over 100% as they actually saw inflows. The boomers hung tough, even tougher than I predicted, and kept the all-important year-to-date number at 15 billion plus. Hanging tough during drawdowns is just as important or more important than inflows in a rally. So you have to understand what's going on here. This doesn't matter anymore. This Twitter echo chamber doesn't matter anymore because this market's becoming institutionalized. For as long as the rest of the market follows Bitcoin, everything is in the hands of the institutions because the institutions are the ones that are actually driving Bitcoin. Last cycle this time, you couldn't have said that because there was only Twitter. And when there was a dip, we all panicked and we were the people that drove the market. Now, to be honest, we're just passengers. We're not driving the market anymore. They're driving the market. We're passengers. Most of the time, what we want to do, we want to get onto the train early. So we want to get onto the train before them. You know, like some passengers get onto a train before other passengers. So we are passengers. We must get onto the train early. And we must also leave early. So let them go on the down ride by themselves. When they go down the hill, they must go by themselves. So yes, as I said, I think that regardless of what crypto Twitter thinks, I think that institutional people, they see it different. They see the next wave of ETFs buying. I want to play you this clip. It comes from Bankless, but I'm not playing you this clip until we get 1,000 likes. I see there's only 817 likes. I feel, after all my preparation today, I feel a little bit insulted. I feel a little bit neglected. I feel a little bit disrespected. You're getting there. 832 likes. 839. The rate of likes is appalling. It's appalling. Oh, there we go. Now we're talking. There we go. Now we're on the right trajectory. Okay, so I want to play you this clip.
Are there any estimates about the next few months of the Bitcoin ETF flows, or are we now in the world of we'll just see it as it happens?
I don't know what the flows will be in the second half of the year, but I expect that we'll see an acceleration as those account platforms come on and as the inevitable tailwinds behind crypto right now, which are massive, push us to new all-time high prices. I will also add, I expect 2025 flows to exceed 2024 flows. There are two reasons for that. One is these wealth platforms coming on board and the institutional capital unlocking. And the other, again, to point back to data, gold ETFs are the closest analog to this Bitcoin ETF launch. They were enormously successful out of the gate. They were the most successful ETFs ever at the time. And year 2 flows exceeded year 1. Year 3 exceeded year 2.
Really?
Year 4 exceeded year 3, all the way up to year 7. When you open up new asset classes, it's a multi-year phenomenon. So I do think...
It doesn't matter. The short-term flows don't actually matter. They're seeing the big picture. And right now, as I say, we used to drive this train. This used to be our train. We're not driving the train anymore. The institutions are driving this train, and they're driving this train on different tracks. They're driving it at their pace, and we're not the ones controlling the pace anymore. Anyway, so as I say, get yourself out of the Twitter echo chamber. Focus on the big picture. That's what you need to train yourself if you want to be a big trader. I don't think whales are looking at crypto Twitter. I think that they're more looking at the much bigger picture. And I think that's where you need to be focusing all your energies. Anyway, as I said, what we need now, we're at a very critical point. You can see, like, I'm going to try and zoom into this line for you guys. Very, very critical point. Right now, we're not winning the battle, but there is a catalyst that could actually help us win the battle. We're just got to close this gap over here. How do we do that? We wait for CPI, because we have the CPI numbers, which happen to, is today Wednesday or Tuesday? It's Wednesday, so tomorrow. Tomorrow we get CPI numbers. If we get 3.1, that talks to what Jerome Powell was speaking about. So what is Jerome Powell speaking about? Jerome Powell yesterday spoke he testified in front of the Senate or the Congress, one of them. I don't remember. The US has got such a complicated system. Senate, Congress, I don't know what it was. Long story short, this is what he said.
We do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%.
So he's not reducing rates unless inflation moved down to 2%. In the beginning of the year, there were no signs that inflation was moving to 2%. Now, towards the end of the year, lots of signs that inflation is moving to 2%.
Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more would strengthen our confidence that inflation is moving sustainably toward 2%.
Good.
Here to help me.
So he's talking about inflation moving sustainably to 2%. If we get a 3.1, which is the forecast for tomorrow, we've got inflation going 3.5, 3.4, 3.3, 3.1. That is an acceleration in the down. So tomorrow is a big day. Obviously, we'll be here bringing you a crypto markets, a crypto lab and crypto wisdom. Also, he said inflation is not the only risk we face. More good data would boost confidence on inflation. Powell says the labor market is strong, but it's not overheated. He also said that the economy is no longer an overheated economy. And so it all comes down to whether or not he's going to start reducing rates. As I said to you before, Citibank are saying 8 rate cuts in the next after September. I think Citibank are smoking good weed, and we should ask them where they're getting it from. So we are looking at it. If you look at the Cleveland Fed, this is like these guys are quite good at forecasting inflation. They're forecasting 3.12, which is 3.1. So there it is. So let's see tomorrow what the state of the nation is. That could. So let's just play out the scenario. We get a good CPI reading, a low CPI reading. What happens then? So here's the problem. I don't think that if we get a good CPI, even if CPI comes in at 3, let's say it's a surprise, we get a good surprise. I don't think that Bitcoin all of a sudden just shoots in the right direction. I think what will happen is, if it happens, the dollar will weaken. But then I think the stock markets will go up into a tear if we have a good CPI reading. Problem is, I'm not sure that Bitcoin will follow. And the reason why I'm not sure that Bitcoin will follow is because of this, because for the last 3 months, the correlation between the S&P and Bitcoin is completely disconnected. We've had the S&P going up, and we've had the NASDAQ going up, and we've had Bitcoin going down. And so the correlation between them seems to be at a 3-month low. And so I caution you guys that even if we have a very good CPI reading tomorrow, we might not get everything that we wanted. For me, all I'm just asking for $2,000 pump. That's all I'm asking for. We just want a $2,000 pump. Put us back in the range. Put us over the 200 SMA. From a charting point of view, it's all looking good. But again, I'm cautioning you that there's no correlation between macro and crypto anymore. And so even if we get an amazing CPI reading, I wouldn't say that resolves or solves every single one of the Bitcoin issues, and all of a sudden we just start trading with the stock market. Yes. So I think I like this tweet. I like this tweet over here. Bears have been getting a little bit too comfortable lately. They've had the largest liquidation since the FTX event. Synchronized government selling, which is fading. When they say synchronized government, I think of like these people in like synchronized ballet or synchronized like diving, you know. Synchronized government selling is fading. Fed cuts should begin in Q4. I think I agree with that. BTC ETF inflows unfazed by the STIP. We've spoken about that. And then we're getting the ETH ETF. Now, I think people are missing something in the ETH ETF. We know the ETH ETFs are a week away from where we are today. Like maximum another week and 1 day, we're getting the ETH ETFs. What I think most people haven't factored in is when we get the ETH ETFs, there's a lot of supply that is actually locked for ETH. Because remember, unlike Bitcoin, where all the supply is basically held by whales or wallets or whatever else, with ETH, it's slightly different. With ETH, you've got staking. And right now, 40% of the ETH supply in the market is actually staked or in smart contracts and bridges, which means that generally less buying will push the price higher because 40% of the tokens are actually not available to the market, which is a very different scenario to Bitcoin. On Bitcoin, you had a much higher market cap. So if you look at, like, let's just say the market cap of Bitcoin versus the market cap of ETH, Let's quickly just go there. Let's quickly just get it for you guys so you can see. Let's just say at face value, the market cap of Bitcoin is about $1 billion and ETH is about $350 million, right? Now, you think about $1 billion and all the tokens are naturally tradable except the Satoshi tokens and the GBTC and whatever else, and the Mt. Gox and whatever else. But the ETH ones, 40% of them are actually locked up in staking, right? Which is very different from Bitcoin. So whereas there could be a lot of similarities, the one difference or the one big difference could be this thing over here, where you've got all these staked coins which are not actually in the market. So it's easier to move the price of ETH. And so I'm leaning more towards, I'm about 50-50, but I'm leaning slightly more towards a positive surprise on the ETH ETF than a negative surprise on the ETH ETF. So I think a lot of people actually aren't discounting that. I think the thing with ETH is that ETH has been, the price of ETH has been disconnected to any market movement in ETH. An ETF was approved, we can't get ETH past $3,500. I think the ETH price has been, I don't know what the word is, but like ETH has become very much like a stable coin. Let's just quickly get us the ETH price here. ETH USD. Okay, so just look at how long this price has kind of been moving between 3 and 4K. Basically the whole year. We're back to the same levels that we were in January on ETH. And remember, this is after an ETF approval. So I think that here, the fundamentals and the technicals don't align. They don't align. Fundamentals and technicals do not align. That's the problem here. And I think that when you get a situation when fundamentals and technicals don't align, in time, they have to catch up. And I think what's going to happen here is that the ETH price is going to catch the fundamentals. And so that's why I know you guys, for those of you who watched my option show on the weekend, I actually took a position here where I bought 50 ETH options. Hold on, let me just get you a dashboard here. Let me just get you a thing. I don't know why the internet is so slow. It's cold, the internet's slow. They served us aeroplane food for lunch at the office. Josh, go and bring those boxes that they served us for lunch. So I can show the people here how they fed us in the office. Aeroplane food. You see, I did take a position. I took ETH options position. You see, I took December and I bought some Bitcoin options as well because it's probably the best way to get exposure to that. As I said though, I think the fundamentals and the technicals can't be, and the price can't be unaligned for long periods of time. For short periods of time, yeah, I agree. For long periods of time, I'll show you. So you see here, I asked, one of the people in the office to arrange lunch at the office for all the employees so we could all have lunch together, we can sit and we can socialize. They bought us airplane food. No jokes, they bought us airplane food. We all got like an airplane thing, chicken or beef. It was ridiculous. It smells. Oof. Yeah, let's move it. All right. So I was saying, fundamentals and technicals cannot be separated for long periods of time. They can be separated for short periods of time, but not for long periods of time. And I want to show you another place where the fundamentals and the technicals just don't make sense anymore, right? Regardless of what's happening on crypto Twitter, regardless of every noise that's getting in crypto Twitter, if you keep your heads up, you see the sky. Now, get this. The total daily active addresses across layer 1 blockchains increased by 92% over the past year. The new all-time high, reaching an all-time high of 10 million daily active users in crypto. Now, can you imagine just look at the growth, block the noise, take the noise outside. People are saying it's a bear market lunch. It's an airplane lunch. There was emergency exits. We got life jackets before we ate it. It was a full airplane lunch. Anyway, what you can see is that the growth of daily active addresses is exponential here. Just look at that, the growth of daily active addresses across all blockchains, exponential. 100 million monthly active users if you go and look at all chains. So 10 million daily and 100 million monthly active users on all chains. And again, just look at the growth. The growth here is exponential. Now, you can tell me that the markets should go up, markets go down. I don't care. Just look at the adoption. And this is real adoption. This is adoption of L1 blockchains. This is adoption of Arbitrum, Avalanche, Base, Blast, BNB, Ethereum, Near, Optimism, Polygon, Solana, Tron. Excluding Bitcoin, we got 100 million active degenerate users. So Yes, you can tell me the market's going through a bear market, but ultimately the bear market needs to catch up to the fundamentals. Either the users have to drop or the prices have to catch up to the fundamentals, and then we basically get ourselves an alt season. That's pretty much what's going on. So take your head out of the crypto Twitter echo chamber and put your head into the fundamentals, because that's actually where it's all happening. Speaking of alt season and fundamentals, we did get a mini alt season for a couple of hours yesterday on a couple of tokens. One of those tokens was actually Celestia, and I spoke about Celestia for a long time. And I spoke about it I spoke about it earlier. It was also mentioned on Frontrunners. Now, for those of you who don't know what Frontrunners is, let me just show you what Frontrunners is, because a lot of you don't know what it is. It is our private Discord group. It is a members-only Discord group. It is not open to anyone, and only when people leave do we take on new people. And once you leave, you can't actually come back. Now, inside Frontrunners is where we put all our calls and stuff like that. If you want to join the waiting list, there is the waiting list over there. Click it. It doesn't mean that you're going to be let in. It just means that you're going to join the waiting list. And if anybody leaves in the next monthly intake, you will be allowed in. This is where all the calls were happening. And the Celestia call was one of them. So let's talk about what the Celestia call was about. I saw a situation on Celestia where I said, I think Celestia is going to run, and it's going to run hard. And I took a position at about $4. Okay, now, since then, Celestia went to $7.80. So in this market, getting a nearly 100% return. Now, the question is, what did I see that made me want to do this? And can we repeat it? Because if we can repeat it, then you can maybe repeat the same performance on a whole lot of coins. So let's talk about what I actually saw. I saw a token that had high FDV, low float, and had been hit very, very, very hard by the market. In other words, the market said, we don't like this token. It's high FDV, it's low float. It doesn't have all the fundamentals that we want. It's one of these scam VC coins. And what we're going to do is we are going to punish it. And how do market people punish a token? Well, they sell it. And if they don't have the token, they go short. Now, what happens when too many shorts happen on a certain token, right? What happens is you get a buildup of shorts. You get a buildup of open interest, this is the number of people that are actually going short on the token. And then what happens is the funding rate goes extremely negative. So what does this mean for people who haven't shorted before? People borrow tokens that they don't have to sell them. It's called selling short. In order to borrow these tokens, you have to pay a funding rate. And as more and more people borrow, the funding rate gets more and more expensive to borrow, to hold a short position. And then what happens is, because it gets so expensive to borrow, what happens is the position starts to unwind. And that's exactly what happened with Celestia. So you had a buildup of these open shorts over here. And then you had the funding rate go extremely, extremely, extremely negative. And then the trade started to unwind on this high FDV, low float, punished token by the market. And so that got me thinking, if it happened to Celestia, and it happened to another token called 𝗧. I don't know if you guys saw a token called 𝗧 yesterday. So here is 𝗧. 𝗧 USDT. Let's just quickly look at it. Again, here's a token that was beat down by the market ever since the April highs. And all of a sudden, we got a huge pump in 𝗧. Again, low FDV, high FDV, low flow token, a high funding rate, etc. And so what I'm realizing is that there's actually a pattern here. What you need to do to catch these tokens is you need to try and find low float, high FDV tokens with large short positions. So the first step is, which are the tokens that are low float, high FDV, and have large short positions? So here's a list of the tokens. So it's Athena, ETHFi, Omni, Tyco, Tia, Sagas, Layer 0, ZK, Wormhole, Dimension, IO, ATH, Starknet, Altlayer. All of these have an FDV which is under 20% of their tokens are in circulation. So we call those low FDV, high FDV, low float tokens. Now, the next thing that you need to look at is you need to look at how much these tokens have already recovered, right? So you say, okay, how much have they moved off from the bottom? And if they've already moved 30, 40, 50% from the bottom, chances are you've probably missed the run. So like Celestia, It's already 40% up from the bottom. Chances are you've probably missed this run, although I do think it might have a little bit more of a run. I think you've missed it. And if you look at like layer 0, put that in orange, you may or you may not have missed this run depending on your trading time range. But for all the rest, what you want to start looking at is you want to look at which are the tokens with high open interest, because that means there's a high number of shorts, with negative funding rates. And if you find a token that has high FDV, low float, negative funding rate, and a big open interest, chances are that the shorts are going to get squeezed. And that's what you want to be looking at. So like these ones here, Altlayer, 14.6 million open shorts, not worth looking at. Starknet, open interest, 50 million, ants. ATH, 10 million, ants. Ionet, only 10 million shorts, ants. We want the high open shorts. And so you start removing all of these, and you look at things like Athena, ETHFI, Tyco can leave. You basically want to find high open shorts, and when you do, and the funding rate goes up, then you say, okay, I'm going to catch this because there's going to be a short squeeze, and these tokens that are going to get, that have been punished, get thing. Someone says Arbitrum, exactly. Arbitrum might do exactly the same thing. Now look, where do you get the funding rates? CoinGlass/funding rates. You put onto the 1 year or the 1 day. You can choose how you like to look at your funding rates. You're looking for the ones that are green and very negatively green. Then you can also look at the open interest. Just click on each individual token and you can actually see the open interest over here. And if there's a big open interest, those are the ones that actually interest you. Again, all of this is in front runners. So you can see the guys made some big money on the front runners on a 5x. Actually, they made some big money on front runners. They made some big money here. I think Injective doesn't have the low float high FDV, but I think it might actually do something. Oh God, I don't know if you guys. Okay, in our daily political segment, I don't know if you guys saw this, but this was fucking classic. I must say, I thought it was a meme at first.
An intellectual rigor, a calm temperament in a moment of crisis, a consummate diplomat who works with leaders across the political spectrum and always finds a way to keep us moving forward. Secretary, you've guided this alliance through one of the most consequential periods in its history. I realize, I was talking to your wife, I personally asked you to extend your service.
No, I mean, I don't know what you heard. I can tell you what I think I heard. I don't know what, Josh, what did you hear?
Yeah,
that sounded bad. I mean, this guy is very, very, very much on the decline. And the White House, I mean, now they're getting some tough questions. And I mean, just look at how the White House is now dealing with the questions.
He's sharpest before 8 p.m. So say that the Pentagon at some point picks up an incoming nuke. It's 11 p.m. Who do you call? The First Lady?
True, I mean, who do you call?
Are you guys just not, since February, testing President Biden for Parkinson's or for dementia? Because if he gets a bad result,
now just look at how she responds.
It's all over that day.
All right, thanks everybody.
I mean, that's the White House press secretary, believe it or not. Like, is that acceptable? Anyway, I mean, the one thing that we are seeing here is we're seeing that Poly Markets is showing that Joe Biden has a 21% chance of actually dropping out of the race. And I mean, a 21% chance he drops out of the race, which has dropped down a lot. Now, I'm not really worried about the race. I know that Trump right now is in the lead, but. Remember, we spoke about active users in crypto, and we said that the number of monthly active users in crypto just hit over 100 million. A lot of those users are actually using Poly Markets, which is while we have been asleep, or while we have been focused on price, we have got another mainstream user application, which is happening, and that is betting Poly Markets. Now, what is Poly Markets? It's prediction markets. And what people do is they make predictions around, you can pretty much make a prediction around anything that you want. Like there's election ones, there's, US, let's go look at some of the US election ones. Will Trump and Biden debate this week? Again this week, less than 1% chance. Let's look at the ones that got 7. Biden nominated before Democratic convention, 79% chance that he will be nominated. So you can take bets on everything that you want. Now, again, for the haters that say that we don't have that crypto doesn't have any real world usage and applications. Here is a market which is not really a bet, or it's a prediction market, not a betting market, so to speak. But just look at the increase in the number of monthly active users. And this has actually opened up a whole new narrative. So poly markets is the first one. There's no token for poly markets, but there are other applications that do have tokens and are starting to get users. And I think what we're going to start doing is start covering these, because here is another use case in crypto, which has been absolutely, absolutely amazing. So I mean, just don't believe the haters. The fundamentals here are very strong. Okay, two things before we go. Number one, remember, I have funded an account on Bitfunded. For those of you who don't know what Bitfunded is, I know quite a lot of you actually signed up to Bitfunded yesterday. You basically learn to, or you can trade using other people's money. So instead of putting your money in the market, rather use this system. And here's how the system works. You pay $99 and you get $10,000 to trade with. You have to do 2 challenges with play money, fake money, right? You have to get 8% in round 1. Once you've got 8%, which is you've made $800 in a $10,000 portfolio, you have to make 5% in round 2. Once you've passed both rounds without a 10% drawdown, you trade $10,000 of their money and you keep up to 90% of the profits. Okay, it's like the craziest thing in the world. On your side, the most you can lose is the $100, but in terms of upside, your upside is not capped. And you're basically trading with other people's money. Now, I have funded an account and I'm waiting to press the trigger. Now, I'm not ready to press the trigger quite yet, but if we get one slight dip in Bitcoin, I'm going to go all in onto Bitcoin, pass the first challenge, pass the second challenge, and then I'm going to trade with their money. And I'm basically going to bankrupt these people. I'm going to bankrupt them. I'm going to trade with their money. Now, you guys, you can do this. I think you can pay in crypto. You can pay with a credit card. I think that this is the safest way actually to be trading, because you're not blowing up your own portfolio. That's the first thing. Second thing is, hold on, is 𝗕𝗬𝗓 live? Hold on a second. I think 𝗕𝗬𝗓 is live. Let's see what the guy's talking about. Hold on a second.
People starting, I know it's bad, but he wants people to start losing their job. They want to see something slowly breaking, so at the right time they can switch on the money printer.
He's good.
Let's talk about some general stuff that I think would be cool for you to see. I talked about Blink.
He's also he runs a thing called the 100X Club, which is another YouTube channel. Don't leave now to go and watch 𝗕𝗬𝗓, but at the end of the show, leave and go and watch 𝗕𝗬𝗓. Probably going to be a very, very, very good stream. Cool. I did want to speak a little bit more about one of our sponsors yesterday. One of our sponsors which I introduced you guys yesterday, is this ALEPH0 token. Now, the ALEPH0 token is not a new token. I'll show it to you. You've probably seen this token a lot. You can see which tokens I've been looking at. I have been looking at 𝗙𝗢𝗙, because, you know, as I mentioned to you, I'm quite a big holder of 𝗙𝗢𝗙, and 𝗙𝗢𝗙's had a big move actually. So here's ALEPH0. So I'll show you like the price action that it's been for a while. It was one of the darlings of the previous market. And then it stopped being a darling because the privacy narrative just didn't go very well. And now the privacy narrative is back because of this whole ZK thing. And what these guys have done is they've actually broken up the project into 2 parts. The first part of the project is that they've got the layer 1 privacy blockchain, so to speak, the ALEPH0. And then, as per this article, which I think explains it pretty well, they've created like a layer 2. So they say ALEPH0, a Swiss firm focused on developing privacy-first blockchain solutions, is launching a developer testnet for its ALEPH0 EVM layer 2, known as ZKOS, which is capable of achieving sub-7 second proving times compared to minutes in other solutions. Now, the thing with ZK is that you have to create a zero-knowledge proof. And how do you create a zero-knowledge proof? You got to create a zero-knowledge proof off-chain. Okay, now what these guys are doing is they've created a zero-knowledge proof generator, which is EVM compatible, off the chain, which generates the proofs very, very quickly and actually makes it usable. So I think if you believe in the privacy narrative, and again, it's a personal thing as to whether you do or don't believe in the privacy narrative and when it's going to explode and if it's going to explode. And if you believe in ZK, you should maybe start looking at them. As I said, they are one of our sponsors. We're very picky about the sponsors that we take here. So yeah, we're very, very, very picky. Yes, I see people in the chat commenting about my 𝗙𝗢𝗙. Let's just quickly see. Yes, I have got a position in 𝗙𝗢𝗙. Let's have a look here. 𝗙𝗢𝗙. Here we go. 𝗙𝗢𝗙. It's up 135. What? Oh, that's not the right 𝗙𝗢𝗙. No, hold on. That's not the. Don't look at that 𝗙𝗢𝗙. It's not. It's called that 𝗙𝗢𝗙 is maybe. Let's have a look at it. 𝗙𝗢𝗙. Here it is. It's 133 million market cap. I actually think that this one's getting a lot of traction. This one's becoming like another one of these Matt Fury characters. Okay, don't believe in FUD about run on Twitter. No, there is no FUD anymore, sir. Cockroach mode. Yes, we are in full cockroach mode. Full cockroach mode. Sunday, I'm going to do a meme show. It's going to be called manipulated coins, because they're not really meme coins. They are manipulated coins. I'm going to give you my unfiltered thoughts around meme coins and what's going on in the meme coin market. And let me tell you, it's not pretty. It's not pretty. You can make money, but you need to know how to play the game. Run, I need a bull market tissue. Here. Here's the bull market tissue. There we go. Bull market tissues. Prince says, great show. Thank you, sir. So Jason Yap says, invite code for prop trading. You don't need one. Just go to bitfunded.com, sign up, play with me. Let's play together. I'm waiting to press the button, but my account's loaded. Banter, what time? 2 hours from now, but on Sunday. Burn the shorts. Gummy and baked. Yes, we did a good spaces on baked yesterday. Manipulate that baked. Just wait a little bit, sir. Please just wait a little bit. All right, guys. I'll see you guys again tomorrow. Until then, trade well, my friends.